This is my next video in my series about adult content creation. This video is going to cover money, taxes, finances, registering as a sole trader, becoming a limited company, and a few other little details to do with money and finances specifically related to adult content creation. If you haven't watched my previous videos in this series, the first one was talking about whether it's even a good idea to start adult content creation, some of the pros and cons of the industry in general. And the other one talked about the admin side of the job, so spreadsheets, scheduling on social media, time management, things like that. The videos can be watched in any order, so you can go back and watch those ones after you've watched this one if you haven't seen them already. Because this is a video about finance and money, I need to start off with a whole load of caveats about this topic. Firstly, that I'm not an accountant and I'm not a financial advisor, so I can't give financial advice. This is not financial advice, and everyone's scenario is different. So you need to speak to an accountant or a financial advisor to get specific advice about your situation. Do some research. It's very individual. I can't cover everything, and I also can't give advice. So that's not what this is. I'm talking about my experiences, the things that I've learned based on my own research. But again, you need to do your own research about what works best for you. That's the legal disclaimer out of the way. I should say as well that I live in London. I'm registered as a limited company in England. So all of what I'm saying is specific to here. I don't know how things work in other countries, and I'm sure a lot of what I'm saying won't apply at all. So you need to have a look at how things work where you are. I just want to manage expectations here because in this video, I'm going to go over a whole range of earning levels, and I wouldn't want someone to watch that and think that it's easy to earn a lot of money just because I'm going to address some people who are on high earnings. It might be that they have multiple jobs, or that they're just very privileged or very lucky, or they got in at the right time, or they already had an existing social media following. There's so many factors that can affect someone's success in this industry. And I just want to show average earnings on OnlyFans just to give you a more realistic expectation and idea of how much people actually earn. It's probably less than you think. It might seem like every week there's a new story about someone buying a house and earning millions every month, every year, but the reality is really not like that. And I don't want to give any false or unrealistic expectations. I'm addressing a real range of people and income levels in this video, but that's just because I want to try and be as broad as possible and try to speak to a wide audience. But I promise you that most people are earning much less than you imagine, and the job really isn't easy. It's definitely not easy money. I just want to start off by managing your expectations about that. I realized that my last video was a little bit dry. It was about, as I say, like admin stuff. So yeah, scheduling and things like that. And my original plan was to have this next one as being something a little bit more exciting. But because the tax year in the UK runs from April to April, I have decided to do this one now and post it in March so that if there's anything you need to do before the end of the tax year, you'll see this video now and you have a little bit of time. I thought posting in April didn't really make much sense because it would be right at the beginning of the new tax year. And if there was something that could be relevant or useful, it would be a little bit too late. So that's why I decided to bring this one forward. But apologies in advance that I'm going to be posting 2 videos in a row, which are on topics which a lot of people find maybe a little bit boring. Not for me though. I actually find all of this really interesting and exciting. Not only the spreadsheet stuff from the previous video, but also the sort of finance side of it from this video, I find really interesting. So hopefully there'll be something here that you find interesting as well. Obviously, as I said, this is incredibly individual, and there might be some things which I say which seem self-evident or seem obvious to you, but then for other people, some of what I say might feel way too advanced. So the way I'm going to structure this is to start off with what I would consider the basics. So if you're just starting out as a content creator or with a side hustle or something like that, this is what you need to know. And then go into more detail about things like if you already have a PAYE job, then this is some things you might need to take into account or be aware of. Then I'll start talking about the point at which you might want to consider setting up a limited company instead of being a sole trader. That's when you're starting to get into the higher earnings, or if you have 2 jobs. And then I'll finish by talking about things you might need to consider once you become a high earner, which I realize is subjective. Just as a reference point, I'm considering a high earner anyone who is over that VAT threshold, which is 90k a year. As always, I really appreciate your feedback and comments and anything you have to say or ask about any of these topics. This is, as I said, a new series that I'm doing, and I want to make sure that the way I'm describing things is easily understandable and useful and interesting for people. So yeah, feedback is very much welcome. I think with finances and money, there's a lot of confusion around it. I was never taught any of this stuff at school. I was lucky enough that my dad had a limited company when he was around my age and continued that pretty much until retirement. So he was able to pass on some of that information to me. A lot of the rest of what I've learned has been from podcasts and YouTube videos and just reading articles and just trying to understand the best way to do things for myself, and then understanding how things work in this country and the best way to make that work for me. I'll just say as well that I'm going to send this to a couple of friends who work in finance. One's an accountant, the other one is a financial advisor. So there might be points where I put little notes on screen where they've fact checked something or wanted to clarify something. So if anything like that comes up, that explains what it is. It's someone who has more expertise than I do, just making sure that I'm giving information that is correct. So with that out of the way, finally, we can actually get into the topic. As I said, I'm going to start out with the absolute basics. So this is, if you're just starting out in content creation, you probably have another job alongside it, which is how I started out. I had a part-time job in retail and I actually started in lockdown. So I wasn't interested necessarily in making a career out of it because I never thought that would be possible. And I imagine if this is you, if you are just starting out, then you probably have another job, or maybe you've just been made redundant or something like that, and you're trying your hand at content creation. As I'm going through editing, I've thought of a lot more stuff that I want to add and say. So periodically, I'm just going to pause the video and add those extra little clips in here when there's things that I've forgotten to say the first time around and want to make sure that I include. There are a lot of reasons people start out in content creation, but it would be disingenuous to suggest that money isn't the main driver, even while it's possible to gain personal and professional enjoyment and satisfaction from the job. It's still a job. And while some people may be in a steady position before starting, I want to acknowledge that many others will start out from a place of uncertainty and even desperation. There are options like universal credit, but there are a lot of barriers for access and proving various things. The budget last November also announced new caps on universal credit, which will inevitably push even more people into poverty. I can't address every single situation in this video, but I'd recommend using an online checker to see if you're entitled to any benefits you're not claiming. In a video about taxes, I want to make it very clear that I'm 100% in support of my tax money going to support the most vulnerable in society and the most in need, and that I would love to see an increase to benefits and disability allowances in this country. HMRC also has this page about universal credit in relation to self-employed income, so it's worth reading through that. This will obviously be much more difficult if you have an insecure immigration status or citizenship, which is one of the reasons people turn to sex work, and one of the reasons I want decriminalization rather than legalization when it comes to other kinds of sex work. But that is a whole other topic, which I'm not going to be covering in this video. So once you earn 1K a year, that's when you need to register as self-employed. Anything under that, you don't need to register. That's your side hustle. So that's separate from any PAYE income. If you're on 30K a year in your main job, and then you earn £500 a year in your side hustle, you don't need to register as self-employed. Once you get past that threshold, you need to register. You have until October to do that, and the tax year runs from April to April. You then have until the following January to submit that self-assessment return and pay those taxes for that previous year. So just to clarify this, if you started working on April 7th, 2026, then that tax year is from then until April 2027. So you actually wouldn't need to pay those taxes in your self-assessment until 2028, January 2028. So you can actually have quite a long time sometimes, depending on when you start. Obviously, if you start at the beginning of April, so April 1st or whatever, 2026, then you have only until January 2027. So it's worth just being aware of those deadlines. But the thing that can catch a lot of people out is having a sudden tax bill in January. So I think what's really important is making sure that you're setting aside 30% of your income each month into a separate bank account, ideally, just so that you don't have a shock when you suddenly need to pay that in January. There's also this really annoying and tricky thing called paying on account. And it's where you have to pay 50% of your forecasted tax bill for the following year on account in January and July as well. So you pay some of your taxes in January and some of them in July. And this is why I say 30% instead of 20%, which is more likely what your tax bill will actually be, because you pay 20% of your taxes from April to April, but then you also have to pay some of that in advance for the following year. And if you end up overpaying, then you can get a rebate the following year. If you end up underpaying, then you just top it up the following year. But I never knew this until I suddenly got this bill and I was like, what is this payment for next year? I didn't know that before then. It can be a shock. So just be aware of that. And putting aside some of that money can be really useful. If you're struggling to pay, or if you get hit with a sudden tax bill that you weren't expecting, because this can be a shock, like I say, the best thing to do is just contact the HMRC as soon as possible. You can often set up a payment plan and things like that. The longer you leave it, the more likely it is that those fees and fines and penalties are just going to build up. It doesn't get better, it gets worse. So the earlier you contact them and try and set something up, the better it will be for you. It's obviously a really stressful situation to be in, and I very much appreciate that, but there are definitely ways to mitigate it. So just try and contact them as early as you can and just start chipping away at it. Registering as self-employed is pretty easy. You just do it on the HMRC website. I'll put up a screenshot of that now and show you what it looks like. One thing I'll say as well is that although HMRC really wants to take your taxes, it doesn't really see the work as legitimate. And I wouldn't recommend putting anything to do with sex worker or adult work on your tax return. Content creator is a relatively safe one and is true. Yeah, adult work has this kind of annoying, weird grey area where we do have to pay tax. It's considered work in terms of them wanting to get money from us, but not considered work in terms of us having legal rights or protection from financial discrimination when it comes to banking. I know people recently have had some problems with bank accounts not allowing payments from certain adult sites into their accounts and things like that. This is something you have to contend with as an adult content creator. It's horrible and really unfair, and something that a lot of people are trying to really fight back against. On that note as well, join the sex worker union if you're a content creator, if you're a stripper, if you're an adult worker, if you're camming, if you're doing OnlyFans, if you're a sex worker in the eyes of the union. Whether you sort of use that label for yourself or not is completely up to you, but you have a right to join the union, and it can be really useful if you're facing financial discrimination or any kind of discrimination related to work. If you're fighting to get something paid, if you're owed money, if you're having any sort of issues to do with your work, then the union can be really useful. It's a really nice community to be involved with. Something to be aware of that as well. Obviously, if you're in a PAYE job, you normally have sick pay and holiday and things like that. If you're self-employed in any kind of work, it's not only content creation, you don't get any of that. And if you don't work, you don't get paid, and that can be pretty stressful and disruptive. Something you might want to look into is income protection. There are different types. Some of them, if you are unable to work, then after a certain period, they pay you a percentage of your salary. It's essentially insurance. So you pay a fixed amount each month, and that's based on the agreement that you have with them. So you might pay a lower premium if you're willing to wait longer before the payments start. If you were to get ill or be unable to work, pay a lower premium as well if the payment amount that you would then end up receiving is lower. There are other ones where you get a fixed payment amount, just a one-off payment if you get ill in a certain way, a list of diseases or conditions that are from a sort of pre-agreed list. One of the concerns I had as a adult content creator was that they might start getting funny about what would mean I could or couldn't work. So like say my leg got amputated and I was out of work for a while. I thought there was a chance the insurance company might say, well, you can still work from home, like most of your job is sitting at your laptop, you can still do that. And I was concerned that as a content creator and as a sex worker whose job has multiple kind of arenas, that they would start questioning what would disqualify me from working. So the type of insurance that I have is just a one-off payment where if I get ill with a condition from a list from their website, then I get this one-off payment. That's just something you need to maybe consider and look into. You might want to have a think about that and just decide whether it's something you are willing to pay monthly for. It's not a massive payment, and it could be kind of life-saving if I were unable to work. If I did have something quite serious happen to me, a health condition or something, then having that kind of safety net of thinking, okay, I'm not going to have to scramble to make rent next month is really important. You can also get an accountant to do this for you. It can actually be quite difficult to find an accountant who's sex work friendly, who understands how this works and isn't going to be weirdly judgy about any of it. And it's also going to have an understanding about what's possible to claim as expenses as a content creator and things like that. Obviously, this type of job is on the rise. So in theory, the number of accountants who are able to cater to this type of audience should be on the rise. But it can be difficult to find someone who is reliable and competent, but they're definitely out there. As a sole trader as well, I don't think you necessarily need an accountant. It is possible to do it yourself, but if you're not good at this kind of thing, or you just want to pass it off onto someone else and not have the responsibility of it and just know that it's going to be taken care of, then finding an accountant is probably a good idea. Now, what I said about keeping aside 30% of your income each month, what I would suggest, and the easiest way to do this, is just to have a completely separate account that you use as your business account. This isn't the same as an actual business account because you're not a business, you're still just a sole trader. But it just means that anything that you consider income as your business, so anything to do with content creation, any money from OnlyFans or Just for Fans, etc., gets paid into that account. And also any expenses that you have get paid out of that account. Keeping everything separate like that is just a really useful way to make sure you're keeping track of things. When it comes to submit your self-assessment, you then don't have to go through your personal bank statement and try and remember what expense was relevant and where the receipt is for it. Everything's in your separate account. It's all in one place. It's all on one statement. And that really makes everything much easier. A lot of these platforms are US based. And even though technically OnlyFans is sort of based in the UK, they pay you in US dollars, as do platforms like Just for Fans and Fansly. And it's only a small note, but it's just something to be aware of, because on the one hand, you'll lose some of that money probably when it reaches your account, depending on what bank you're using with the conversion. Although you can claim that back when it comes to doing your tax return, because it's technically an expense. But you just need to be certain that your bank account can actually receive US dollars, because some of them can only receive money in pounds. And it's only a small point, but it's just something to be aware of. Now, just then I mentioned expenses. So one of the benefits of registering as a sole trader is that you can claim back tax relief on expenses that are relevant to your business. This can be tricky. There's a lot of gray areas around it, and you do have to be quite careful. It's really important to keep receipts. So anything you spend that's related to the business, just keep a receipt, take a picture of it. There's software that you can use to upload and keep track of it all, but just put it all in a folder on your Photos app or something like that. Just make sure you have a record somewhere of everything that you spent. This way, if HMRC ever asks questions about what an expense was or whether it really was for the business, you can show them the receipt and say, yeah, it was for a camera, a tripod, some lights, something like that. You do have to be careful about claiming expenses. It might seem like as a content creator that pretty much anything goes, but it's really not the case. The actual rule around it, and I'll put up a screenshot of this from the HMRC website, is that it has to be entirely for your business. So that means you can't buy an outfit which you wear once in a video and then keep for yourself, because that's not entirely for your business. That's for yourself as well. One of the areas where people get into trouble is with food and travel. My accountant has told me don't claim food. So go out for a meal with some content creator friends and we're talking about planning content and things. In theory, that's a business expense. I'm entertaining clients and things like that. It just has to be very careful about stuff like that, because it's areas like that where HMRC can crack down and say, where's the proof that this was a business expense? Travel as well. I know some people who do TikTok and things like that, they will go on holiday, claim it all as a business expense, film one video while they're there and say that that is a business expense. And technically that's really not allowable. And I'd be very careful around things like that. HMRC can and has and will ask for evidence that a trip was a business trip, and should be very careful about stuff like that. I'm saying this not to be on HMRC's side, but just to say I don't want anyone getting a horrible fine when it comes to stuff like this. So just be really careful. Obviously, if it's a work trip, if you're going to film, if you're going to work, then it's 100% claimable. I often do work trips and I travel around the UK and film. And then, of course, my hotel and train are business expenses because it's a work trip. It's just getting to that point where if HMRC were to ask you, where's the proof that this was a business trip? This was a work trip that you were filming. Are you able to provide that evidence? So I'm going to put this list up on the screen with some text, basically just showing what kind of things HMRC would expect you to show and be able to demonstrate if they were to ask you about a trip. Basically, any kind of evidence you can provide is going to help. So things to do with arranging collaborations with other creators, any bookings you've made that are related to content creation, any model release forms that you have, screenshots of content, posting schedules, texts and messages with other creators, and just make sure you have a note of things like the travel dates, the content that you made, the people you worked with, so that if you were to be audited and asked in more detail about some of this, you'd be able to show more kind of physical evidence about the purpose of the trip. So my advice is just to be sensible about it. Just think about if you were to be sitting in a room with a tax man and they were asking you to justify each of these expenses and these trips and things, are you going to struggle to explain that? Now, when it comes to taxes, the first £12,500 of your income is tax-free, and that's the same for everyone under a certain income level, but we'll get to that later. Then from that 12,500 up to 50,000, you pay 20%. Above that, you pay 40%. And then on income over 125,000, you pay 45%. I'll go into some more detail about some of those tax brackets and what they can mean for you in the next little section. But for now, if we're sticking to the basics, that's pretty much just what you need to know. So in summary, over 1K, you register as self-employed. You have until October to do that. Keep receipts, retain 30% of your income each month, pay your tax bill in January and July. I'd say those are the main things you need to know at that point. So you're just starting out and you just have a little bit of extra income on the side. Now, the next section kind of has two aspects to it. I'm going to talk about setting up a limited company and when this might be a good idea for you. A sort of subcategory of that is if you already have a PAYE job, then setting up a limited company can be a really useful way to separate your income so you don't end up paying ridiculous amount of taxes on it. I guess the main thing to say if you already have a job is that you still have that 1K limit before you need to register as self-employed separately from that, but your income still stacks and then you pay tax on the total amount. So you don't get a personal allowance that's tax-free for each job. What this means is, say you're earning 40K in your PAYE job and you start to earn 12K a year in your content creation. Previously, you were on the 20% bracket in your PAYE job because you're earning 40K. And then now that you're earning 12K in your content creation job, that's pushed you up onto 52K, which means that you're paying 40% on everything above that 50K limit. That's really just one example. And you can see how clear it is that it really depends on your income. If you're earning 20K in your PAYE job and you start to earn 5K in content creation, you're earning 25K, you're still well below that limit. And I don't think setting up a limited company is really something you would need to consider at that point. This is why I want to combine this section to say it's not only about if you have a PAYE job already, but it's also maybe more specifically once you start to earn over about 40 or 50K a year, whether that's combined income or just in content creation. So if you have no other job, no PAYE job, but you're earning, let's say now 50K in your content creation job, this is when setting up a limited company instead of being a sole trader could be something you might want to consider. There are a lot of factors and I'll try and talk about some of those and some of the pros and cons of it. Again, it's something that I would really recommend doing your own research about, speaking to an accountant about, and then coming to a decision by yourself about whether it's something that's right for you. Essentially, a limited company in the UK is a completely separate entity. So you have to remember that you're not the company. It's not your money, and you have to consider it as something completely separate from yourself. I have a limited company, and when I get paid by OnlyFans and Just for Fans, all of that money goes directly into my limited company. I then pay myself a salary and dividends from that company. Everything is completely separate. I don't consider the money that's in the business my money. It's almost like my employer's money, and I'm getting a salary from that. Obviously, I have complete control over how much I pay myself and things like that, but it is really important to remember that you can't treat that money like your own. You have to remember that it's separate, and there are very specific rules around limited companies that you need to be aware of. Essentially, the benefit is that you have a lot more control over how much you pay yourself and therefore how much tax you end up paying. There are online calculators that you can put your income in and put in how much you spend each month and so on, and work out whether it's right for you to stay as a sole trader or set up a limited company. One thing I would say though, when I'm testing out some of these online calculators, is that they assume that you're taking everything out of the company each month. And if you're paying yourself 100% of everything that's in the company, then often it makes more sense to stay as a sole trader. And this is something I'll try and explain in a bit more detail to make it clearer. So when that money reaches your business bank account, you pay corporation tax on it, which is anywhere from 19% to 25%, depending on the level of income. You pay that tax after expenses, and expenses includes the salary that you pay yourself. So there's lots of ways to reduce your corporation tax bill, including paying yourself a salary, paying into your pension, obviously expenses for the business, they all come out of that bill as well. But then when that salary and dividends reaches my account, I still have to pay personal income tax on that. So normally the way it works with a limited company is you pay yourself a salary of £12,500 a year, which is obviously your personal allowance, so you don't pay any income tax on that. Above that, you pay yourself dividends up to however much you need. Dividends can only be paid from the profits from the business. You can't pay that before corporation tax, that comes after. And dividends are taxed at 9%. It's going up. We'll say 9% for now. Consider it about sort of 10, 11%, just as a ballpark. But obviously that's much less than the 20% income tax you would pay if you were taking that as salary, or if you were a sole trader and being forced to pay income tax on anything that goes into your bank account. I'm hoping this is making sense. It's actually quite simple. Maybe I'm overcomplicating it. Let's say you are earning 60K in your content creation job. If that all goes into your limited company, you're going to pay the corporation tax on it. Let's just say it's 20%. If you wanted to then pay yourself that entire 60K, you are paying tax on that twice. And in that case, if you're going to use all of that money every month, every year, it makes more sense, I think, to stay as a sole trader, because otherwise you are paying tax on that twice. Plus you have all of the added admin and accountancy fees that come with being a limited company, which you don't have to consider as much when you're a sole trader. Although saying that, with Making Tax Digital, which is a new system where you have to submit quarterly reports as a sole trader, that accountancy and admin fees are starting to balance out a little bit. So that's something you need to look into as well. Without going into too much detail as well, you don't pay national insurance contributions on dividends. You only pay it on income. As a sole trader, that can end up being quite expensive. Whereas as a limited company, if you're only paying yourself that 12.5 personal allowance as a salary, and then the rest is dividends, you can reduce that bill as well, the national insurance contributions. I'm just going to put on screen some illustrations of how this might work. There are a lot of other benefits to having a limited company and ways to save tax. These are all completely legitimate, by the way. These aren't tax dodging. These are just legitimate legal tax reduction methods that are part of the way the tax system in this country works, and are, you can find these on the HMRC website. This is not me explaining tax loopholes or anything like that. This is all completely legitimate. The biggest way to reduce your corporation tax bill, aside from paying yourself a salary, which obviously then you pay tax on when it reaches your account, is to pay into a personal pension, or a SIP, self-invested personal pension. Now, I know that the way the world is at the moment, and the fact that a lot of us are really struggling to make ends meet as it is, and we need the money for rent and bills and everything like that, paying into a pension could be the last thing on your mind. But if I can convince you to do it, then I will just say it can also really benefit you right now. It's not just about thinking about the future and planning ahead. It's going to reduce the amount of tax you pay right now if you have a limited company. It can actually also do that through salary sacrifice if you are in a PAYE job. But in terms of content creation and what I'm talking about now, and having a limited company and the ways to reduce your corporation tax bill, paying into a pension is one of the best and most tax efficient ways to do that. My approach to this, and I know it's going to be different for everyone, and your priorities and your ways of thinking about this are going to be extremely individual. But for me, as a sex worker, I don't know how long I'm going to be able to do this job. And for that reason, I just want to really try and prepare for my future in a way that's like the most sensible way I can. And when I say future, that could mean retirement, which is why I'm thinking about pensions. But it could also just mean in 5 years' time, when who knows what state the country is going to be in, who knows what restrictions and limits we're going to have on our digital privacy and around online porn. And as a trans person, there's a lot of anxiety there as well. I just think in terms of financial stability, doing whatever you can to think about your future is just so important. If you're earning well now, I don't think it's sensible to assume that that's going to continue forever, or even continue for a year or two. In this job, you're so reliant on algorithms, and that can change overnight. You're reliant on platforms which often really don't care about you or your personhood, or care about defending you or protecting you as a sex worker. I'm not trying to be negative about this, but just realistic, and just say that you need to look out for yourself. I really want every sex worker, every sole trader, but every sex worker watching this video to have a happy and comfortable future. And if you take away even one small thing from this video that enables you to do that, then I'll be very pleased. If you don't feel confident in doing this yourself, you can speak to a financial advisor. Some of them only work with people over a certain income level. I will say it's very easy to do it yourself, and the fees are much lower. I have my pension with Interactive Investor. There are a lot of different competing sites and apps and companies that offer this. The thing about some of them is that they don't all accept contributions from a limited company. Sometimes it needs to be a personal contribution. I have an account with Invest Engine, which I use for other things, and I wanted to set my pension up there, but I had this problem where I couldn't pay into a SIP there through my company. So yeah, I'm using Interactive Investor now, and they've been really good so far. The fees are relatively low. It's quite easy to set up, although with a limited company, it's a little bit more complicated, because rather than just doing it directly from your bank, you have to fill out a form and do a whole bunch of stuff. But all of the information is available there on the website, so you can just follow the instructions and set it up that way, or pick a different company, whatever works for you. But get a pension, get it sorted. With compounding and just leaving the money sitting there for a long time, you don't really have to contribute very much in order for that to really build up over time and be a nice little pot for further down the line. Another benefit of a limited company is that you can add your partner or spouse onto the company and split some of that income with them. So if they're not working, or if they're on a very low income, then you pay them a salary that reduces your corporation tax bill. And that's just another way of getting money out of the company in a tax efficient way. There are a lot of rules and caveats around that, which I won't go into. It's just something to be aware of. Speak to an accountant about it. Do some research around whether it's the right thing for you. But if they're not using their personal allowance, then it's kind of a no-brainer. You can also pay into your partner's pension. Again, they need to be on the company and all things like that. But yeah, there are really tax efficient ways to have your limited company structured in a way that really benefits you. A couple of downsides about being a limited company are that some of the information about you and your company is publicly available on Companies House. That means if anyone has your company name, they can search it and see your real name there online. They can see your address, which most good accountants, especially ones advertising their services to sex workers and people in adult content creation, they'll be able to help you get around that by offering their office address as your registered company address. But your name will be there because you're the director, and there isn't really a way around that as far as I'm aware. So in terms of privacy concerns, that's something you might want to be aware of if you're going to be using your company name in a public way. Of course, you don't have to. You can keep that private, but if you're going to be sending invoices or sending money to anyone from your company, that company name is going to be known by at least some people, and that's just something to be aware of. Another thing is that it is more expensive. So being a sole trader, you only have your personal tax returns to think about. And as a limited company, you still have those personal tax returns because you're paying yourself a salary and you still have to submit a personal tax return based on that. But you also have your corporation tax return. It just makes it all a lot more expensive. Obviously, that is a business expense because it's a tax related expense. So my company pays for that, but it's something to be aware of. It does get more expensive. One of the real kind of superpowers is if you have a PAYE job and you set up a limited company, you can keep that money in the limited company and you don't have to pay yourself any of it, which means that if you're already on a decent enough salary in your 9 to 5 and you start content creation, you can keep that money completely separate, pay into a pension as much as you want, have all of those expenses coming out of the company, and not pay any extra income tax because you're not paying yourself anything from the company. Having that control over it and keeping it separate is a really good way to save tax. Say, for example, everything is going really well. You're on, let's say, 50K in your PAYE job, and you start earning 50K in your content creation job as well. Now, previously, if you only had your PAYE job, you'd be just under that limit to start paying the higher level of tax, the 40%. So you're still paying 20%. Now, suddenly, as a sole trader, not only are you pushed into that 40% bracket, which is over the 50K mark, but also over 100K, you start losing your personal allowance. So you're essentially getting taxed at 60%. If you stay as a sole trader, there's no way around that. Well, I mean, there's salary sacrifice through your PAYE job and you can pay into your pension and things like that. And obviously you can bring down your content creation income by also paying into a pension. Actually, you can do that as an individual as well, and through expenses and things. But let's say this is after all of that. This is the money that's coming into your account. If it's over 100K, you start to lose that personal allowance. Now, just picture that scenario again if you have a limited company. So now in your PAYE job, you have 50K as your salary, just under the threshold where you're paying 40% on it. And you have 50K going into your limited company. You're paying corporation tax on that, so let's call it 20%. As I said, there's a marginal tax rate thing, so it does vary, but let's call it 20% to make it simple. Now, if you've actually got 50K going into that, you can massively reduce your corporation tax bill by paying as much into your pension as you want. There are limits each year, but unless we're talking into the sort of tens of thousands, it's not something you're likely to have to consider. So in that scenario, if you don't need that 50K that's in your company, you can put 20 or 30K into your pension each year from that limited company. You're getting corporation tax relief from that right now. Obviously, at some point when you start withdrawing from your pension, you're going to have to pay income tax on that, but that's not something you need to think about for years, depending on how old you are. So just to summarize the limited company and two job side of things, having a limited company gives you a lot more control over how you pay yourself and how you manage your salary and dividends. I'm going to put that limit at roughly 40 or 50K a year, but this is really individual and depends on whether you're paying yourself everything from the company or keeping a lot of it in the company. Pay into a pension, especially if you have a limited company. And now the last sort of section of this video is going to be talking about high earners. So anyone over that threshold, which is 90K. Whether you're a sole trader or a limited company, once you start earning over 90K, you need to register for VAT and start paying that. In some cases, you need to actually register before if your kind of forecasted earnings are going to go over that threshold. That's something an accountant will be able to help you with. Once you start paying VAT, your accountancy fees will go up. It's more expensive. Although, as I said, this thing with making tax digital means that sole traders are going to have to do quarterly reports as well and quarterly returns. And that's quite similar to VAT. The threshold for how much you need to be earning before you start needing to do these making tax digital returns is being lowered each year. And eventually, I think will be for limited companies as well. So it might not be relevant because eventually it'll be for everyone. But it's something to be aware of if you were sort of considering, should I be a limited company or sole trader? The accountancy fees might be quite similar now, but they're definitely more expensive for VAT. Personally, I really wouldn't recommend trying to do this yourself. The fines and the penalties for getting VAT wrong are hefty and it can be quite complicated. There's a lot of things to be aware of. At this point, I think you should have an accountant. One thing to note about how OnlyFans does VAT is that it has a kind of strange agreement with HMRC. And it just means that you have to claim your VAT back from OnlyFans each quarter and then pay that to HMRC. So it's It's a little bit complicated. I won't go into detail about it. It's just something that if you're hiring an accountant to help you with your OnlyFans payments and you're over the VAT threshold and you've registered for VAT, it's something that your accountant needs to be aware of and you need to be aware of, because quarterly you need to request that, like manually send an email to OnlyFans with your documents and say, please release my VAT payments. And they do that and you pay HMRC. You normally pay HMRC first, actually, because OnlyFans can be quite slow to release those payments. That's just a small note. As I say, I won't go into detail about it. But if you are hiring an accountant, just make sure they're aware of this, because it's quite a unique agreement that OnlyFans has with HMRC. I don't think any other companies in the UK do it like that. I could be wrong. But yeah, it's something to be aware of because it is a little bit complicated. And I think if someone doesn't have experience in that area, it could be quite new to them. We'll talk about a few other things that you might want to think about when you start to get to this earning level. We've already talked about pensions, so I won't drive the point home too much, but I will just say at this point, you should definitely be paying into your pension. It will definitely benefit you now and in the future. Again, I don't want to alienate people because I know that a lot of people, especially sex workers and especially those of us in any kind of adult work industry, are really struggling. And the thought of having money left over at the end of the month is like a dream. And if you're struggling to make rent each month, hearing me talk about pensions and investing and things like that is going to feel really alienating. So maybe just stop the video at this point if it's going to feel like that. I just want to make sure that I'm speaking to everyone who might be watching and speaking to a wide variety of situations. So if you do have money left at the end of the month, then there are a few things you might want to consider. One of them is an ISA. So this is something you can only do with your personal money. You can't do this from within a business. It's a tax-free savings account and you have a 20k allowance each year. Previously, you could use that for cash. So you could just put that into a cash savings account and get interest back on it. Or you could use it for a stocks and shares ISA, which would be investing. So from April 2027, you're only going to be able to contribute 12k in cash and the rest will have to be investing. This is kind of a part of a drive to try and get people to invest more. I don't think it's a very good idea and I don't think it's the way to get people to invest. But that's what they're doing. If you have that money left over, then putting it into an ISA is really good because it means that if you don't withdraw that, you never pay tax on any earnings from it. So if you're putting it all into a 4% cash savings account, you're never going to pay any tax on that interest. If that's in a normal savings account, then over a certain limit, you have to pay tax on that interest. If that's in a normal investment account, you have to pay capital gains on anything that you earn from that. Whereas if it's in an ISA, stocks and shares ISA, you can invest the maximum 20k per year and you never pay anything on what you gain from within that ISA wrapper. Obviously, I can't tell you what to invest in. I will say that I have a stocks and shares ISA and I keep it very simple. I stick to a world tracker, which is a kind of ethical one that is a bit of a grey area. It's called ESG, which I think is like environmental, social, governance, something like that. And the problem with ethical investments, in quote marks, is that there's actually not very much regulation around the criteria that something needs to fulfill in order for it to be considered ethical. But there are certain companies that I don't want to support. There are certain industries that I would rather not invest in. So I stick to a simple world tracker. I don't invest in crypto or individual stocks or anything like that. Try to stay away from sort of what I would consider riskier investments, things like gold and silver, which maybe seem exciting or seem like a good idea if you watch TikTok videos about it and stuff like that. But over the long term, I think I would prefer to just play it safe. Something weird about this as well is that when it comes to ethical investments, usually the way they define that is to exclude certain industries. So that'll be things like tobacco, gambling, firearms, often oil and gas and things like that. It also excludes adult work. So that'll be things like strip clubs and all of these things that I just think I wish I could pick and choose a bit more exactly, but then there's not really a way to do that unless we're going to pick individual stocks. But the good thing about the world tracker is it just keeps everything simple and it kind of does all that automatically for me. If you're a high earner and you do have money left over, I think a balance of paying into a personal pension, which is money that you can't access until you're in your 50s or 60s, and then having an ISA, which you can access whenever you want, but which you've already paid income tax on, I think having a balance of those two is definitely the way to do it. If you think you might need to access that money in the next few years, then sticking to a cash ISA makes the most sense. An easy access one, so you can withdraw the money whenever you like. If you're pretty confident you won't need to touch it in the next few years, then putting it into a stocks and shares ISA is likely to bring you higher returns, but of course you could lose all of that money. There's always a risk with investing that you could lose everything. Historically, the market kind of shows that it will just probably go up, but you can't rely on that, and you definitely can't rely on needing that money in a few years. So investing is for the long term. When it comes to your personal pension and your stocks and shares ISA, There are ways to do it where it's pretty hands off. So this is just like a robo investing option where you would answer questions about your age, income, risk level, and the kind of investments you want to stick to. So that would be things like ethical and green investments. And then they manage it all for you. So the fees for that would be more expensive than if you were just doing it yourself. And sometimes that can really eat into your returns. So it's something you need to manage and sort of weigh up about whether it's the right thing for you. But if you're not confident in picking your own investments, then letting these platforms do it for you can be an easy way to do that. I should mention as well that with ISAs and investing and anything, or even just putting into a savings account, it can feel overwhelming or feel like it's the territory of people who are very rich. And obviously in this portion of the video, I am addressing people who do have a lot of money and do have a high income. But if you're watching this far and you're thinking, there's no point in me even thinking about this because I'm not earning that much and can't see myself earning that much at any point in the future, then I just want to say, if you have even, let's say, 10 or 20 pounds left over at the end of the month, or you feel like you could cut back a little and manage to free up that much, you can invest with that much. A lot of the different accounts and platforms vary, but with some of them, you can invest starting from £1. So it's just something to bear in mind. I guess when you think of investment platforms or investing in general, you might think of hundreds of thousands of pounds, and that's really not the reality for most people. It can be really satisfying and rewarding to just put in a tiny bit of money each month and see that grow. So I just thought it's worth mentioning that you don't need very much to get started, and it's worth having a look into different platforms where the fees are extremely low, often zero for platform fees. That's true of Invest Engine and Trading 212 and a few others. And yeah, you really don't need very much in the account to get started. Now, if you have a limited company and you have a lot of money sitting in your company and you don't want to pay yourself that for whatever reason, whether you don't want to have to pay the income tax on it, if you already have a PAYE job, or whatever reason, there are things you can do to grow your money within the business. You can set up a general investment account as a company, but there are things to be aware of. So if your investments start making more money than your income from the business for whatever you've told HMRC is the purpose of the business, so your content creation, you're into the entertainment industry, if your investments start making more money, you're then considered an investment company, and that carries with it a whole new set of rules and regulations. So I think if you're going to invest from within the company, you need to be very careful that your earnings as a company stay well above whatever gains you're making from your investments. Yeah, I would do a lot of research and be very careful when you're investing as a company, because there are a lot of restrictions around it. But it's possible. You can also just have a basic business savings account. So that works very similarly to a normal personal savings account. Remember, this is all the business's money. You can't just use that as you see fit. Tide is a good one. This is what I use for my business savings. I would recommend it as a company. So I will link my referral code to Tide, as well as Invest Engine, which I use for my personal stocks and shares ISA, and Interactive Investor, which I use for my SIP. I'll link all my referral codes for those in the caption. Yeah, so with Tide, you can set up a business savings account. It's like 3%. It's not very much, but it's better than nothing. It's better than it just being sitting there doing nothing. And of course, you do need to pay tax on that income. That's something that your accountant should be doing for you. In general, if you connect everything to some sort of accountancy software like Xero, which is the one I use, then all of that is kind of done for you. Your accountant can go through and do your tax returns for you. I don't do my own bookkeeping or anything like that. I just send off my returns, connect everything to Xero, and my accountant does it for me. As I say, I use Tide for some of my business transactions, and I don't actually know what their approach is to adult work. And I think sometimes it's a matter of kind of slipping through the cracks if I haven't got transactions going into that, because I don't use it as my main business bank account, that are easily flagged up as being related to adult services. Then it might be that they just haven't flagged my account, and maybe that'll happen at some point, and it's just something I'll have to deal with when it comes to it. So when I say that I use them for certain things, I can't say that it's an endorsement of their ethics or their approach to adult content, because frankly, there are no banks that I'm aware of that are publicly and openly and proudly supportive of sex workers and sex work, which is a real shame and a real gap in the market, actually, because this kind of work is on the rise, and a lot of people work in this industry now and are trying to do things properly and are trying to interact with HMRC in a way that's legal and above board, and there are a lot of barriers to doing that, unfortunately. Okay, covered a lot of information. I hope that was clear. I think it's difficult sometimes with topics like this because some of it is really obvious, like I said, and some of it is really complicated. And as a viewer, you're going to be watching it with your own experiences and your own opinions and your own background. And I want to try and make sure that videos like this are accessible to everyone. And if you are just starting out, then just the basics is kind of all you need to know. And if you've been doing it for a little while and you're thinking, how am I going to progress and how am I going to grow my company and grow my career and things like that, then starting to think about things like a limited company can be really useful. But I don't want that to be alienating to anyone who is just starting out and is just like, how the fuck am I going to do all of this? Because right now you don't need to. Okay, I hope some of that was interesting and useful. I hope it was clear. If anything needs explaining in more detail, or if I can go over anything and make it clearer, or if you have questions about anything that I've said or comments or feedback, then as always, I really appreciate anything you can let me know about. This is still just the beginning of the series, and I want to make sure that I'm explaining everything in a way that is clear and accessible and useful. Obviously, all of this is based on my own personal experiences and is not universal, especially when it comes to finances and stuff. But I hope there's at least one or two things from this video that you can pick up as being helpful to you. Thanks so much for watching. Please leave a comment, please subscribe, please like the video, please share it with anyone who you think might find it useful. And I will see you next time. Bye.